Hello everyone, welcome to a new episode of the Weekly Trading Idea. This is Walid speaking. I hope you had a great weekend. Today is the beginning of a new week in Forex with new opportunities ahead. I will be revealing for you one of these opportunities with a combination between technical and fundamental analysis as usual. First, let me do a small recap about last week's idea. Euro Yen was in our watch list after reaching the bottom of channel as you can see with key level 120.3. What we were waiting is the reaction here, a close below this level for sellers and a rejection for buyers. The second scenario happened, and now price bounced up and almost reaching 61.8 from the total down move. Next stop for buyers is this resistance zone here at 122.5 area. It could be a good level to bounce down, testing the bottom of channel. Alternatively, any break for this area could be the test for the top of channel. Now let's move to this week's trading idea. Today it's gonna be different. I will be talking about an index, the dollar index actually. For those who don't know, the dollar index shows the strength and the weakness of the US dollar versus a basket of currencies. These currencies are mainly euro, Japanese yen, the pound, and the CAD. The euro is the most affected currency by the dollar index, with about 57%, the yen with 14%, the pound with 12%, and the Canadian dollar with 9%, as you can see here. Looking at the economic calendar for this week, we have important news on the US dollar on Tuesday. As you can see, the CPI, the Consumer Price Index, which is a major measurement for the inflation, which is in turn a watch list for the Federal Reserve. If the actual numbers came above the expectations, we could see a rise in the dollar index, and alternatively, any big deviation to the downside could be very negative for the dollar. Also on Thursday, we have the retail sales, which is expected to be good. It's also on our watch list. So now let's move to the technical part to see the structure for the dollar index. The dollar index has been forming lower highs and lower lows since the beginning of October 2019, which is the definition for a bearish trending market. Now we are sitting at the fourth high, and if this trend remains in play, we could see another low, which is the fourth low, targeting on the long term that 96 area, which is also a support as you can see. Of course, our first target won't be the 96, it will be the 97 as the 38.2 from the total up move of the fourth high. And if this trend fails to hold the bearish descending market, we could see a reverse for this trend and a move higher, maybe to this level at 98.4. But of course, for this to happen, we need also a close for the 97.8 because this is a major resistance level to avoid a fake breakout for this trend. Studying the dollar index is very important for your trading strategies because using this dollar index, we could expect what will happen in euro mainly and on the pound, the CAD, and the yen. The major influence will be on the euro. So if we are expecting dollar index to be down, we could see euro up. As you can see, euro here is approaching the bottom, which could be a sign for bullish movement targeting previous resistance zone. Same for the dollar yen. If the dollar index go down, we could see also a fall in the dollar yen, especially after reaching a major resistance level. So that is it for me this week, guys. Thank you for listening, and I will see you next week.